Hey, I just want to apologize real quick for the audio in this recording. This was a transatlantic connection, and we had some periods where I couldn't quite hear what he was saying, and vice versa. So we did our best. I think that this is a great investment. I'm actually interested in getting into it myself, but the audio is not awesome. I hope the show is still good. Thank you for being here, and please excuse any of the interruptions that we have in this show. Welcome back, everybody, to another episode of Alt Reports Radio, where I go deep on private investments run by experienced GPs, founders, and CEOs, and we dig into alternative and private investments. And today, I'm very happy to be on here with Benjamin Shard, and we're talking about Treasure Hunter Media. And this is something I'm really excited to talk about because so far we've had sort of a lot of real estate and a lot of debt funds. And by the time this comes out, you probably will also have heard me talk about income share agreements and like all kinds of things like that. But this is something new to this show, and that's very sort of, I don't want to be trite, but like near and dear to me. My first good business that I sold was an online business, and a lot of my friends are in online business. And the scalability and just the remote, low cost, high margin nature of the business is very, very appealing. And so I'm psyched to have you on here, Benjamin, to talk about what you're investing in over there and how it all works. Thanks for being here.
Yeah, thanks for having me, Brad. Thanks a lot.
So tell me a little bit about how you came to, I want to get into the thesis and how your fund works, but tell me a little bit about how you got to this place where you are now and what you're doing.
Yeah, sure. So maybe I start with Evergrowing. Evergrowing is another company bootstrapped and founded like 10 years ago by Michael and Nora, who are also co-founders at Treasure Hunter, and I joined then in 2017 and as a CEO at 2019. And with Evergrowing, I personally tap into like leadership of a commerce content or like a content business. So Evergrowing is a pub tech company. We create commerce content, so product reviews, product comparisons. So think about like the Wirecutter in the New York Times, right? We create this content and we publish this on renowned media like RTL in Germany or VentureBeat in the US. And by doing so, we not only like developed a lot of IP and tech, thinking about our DSP, our data science platform to automate processes, our operative playbooks, our SOPs, our own ad marketing platform, which acts like a self-service platform with key accounting on top. But we also get to know like how these large media corporations work, what are their strengths, what are their weaknesses, where we can loop in a lot of expertise and assistance. And this was at a time back in 2020 to 2021 when all the roll-up cases and aggregators popped out, especially in the e-commerce space, right? Thinking about Phrasio, SellerX, and so on. And well, this was the time where Treasure Hunter was born because we sat together with our two other co-founders, Daniel and Olaf. We said, well, our circle of competence is really everything related to digital content. And so generating traffic and monetizing traffic in the end of the day, these are our core skill sets. And by aggregating these assets, thinking maybe putting a little bit of numbers here already to it. So we are targeting around like 300K to 1 million in asset value. And by acquiring these single assets and grouping them to portfolio, we do not only see this great growth based on synergies and also grow, I would say, more stability. But on the other side, we can really take advantage of this multiple arbitrage because typically these content sites are traded at an EBIT multiple somewhere in this 2.5 to 3.5 range. And obviously a grown media and like techy media corporate.
Just in case. I'm afraid we're
Sure. Oh, yeah, sure.
afraid we're
Sorry for getting through.
with with the speed that we're going. So I want to roll back just a little bit, and make sure that I understand what you're saying. So the first company you're talking about where you met your co-founders is called you're ever growing.
Ever
Is that
growing,
right?
ever growing. Exactly. Yeah, ever growing.
Yeah, ever growing. And so are you selling content to those platforms, or are you a consultant to the platforms that you
Yeah, we are
mentioned, or
partnering
what? Help
up.
me
Yeah.
understand.
So we run, we
Okay.
name it a subfolder leasing model. So what we do is, for example, on RTL, we own a dedicated subfolder
Yeah.
that is like filled in with commerce content. That we create the commerce content, publish it there, optimize it tech-wise, SEO-wise, and conversion-wise. And then we have just a kind of a
Okay.
rev share model on top of that. That we are then so we share the affiliate commissions and CPC commissions with the publishers. So that's the business model, to put it in a nutshell.
Okay. And so for Treasure Hunter Media, did I hear you say you're targeting acquiring sites that are in the 300,000 to 1 million USD, $1 million range? Is that what you're talking about?
That's correct. So we
Okay.
are targeting these content sites. So think about like blogs, like patent-driven blogs, typically having a grown audience already behind it. And yeah, we merge them in specific verticals like sports, food, gaming, travel, and grow them based on the playbooks, based on the tech we have developed.
So when you're targeting these sites, help me understand a little bit about um, when we're talking about 2.5 or 3x multiples. You're talking about on earnings, on EBITDA, or on seller discretionary earnings. Is that the multiple that you're looking for on those?
On the EBIT, so we are talking about yeah, it's about a 2.5 to 3.5 EBIT multiple. But the interesting part here really is the high margin, the high EBIT margin. So, well, if you take a look at the on market, like Empire Flippers or Flipper.com, where these assets are traded, you typically see like an EBIT margin of 95%. Typically, there is not like the work and effort by the founder considered, right? But even if you consider that, you're still in the 60 to 80% EBIT margin range, which is stunning.
Wow. Yeah, that is stunning. So are you finding these off market? Are you buying these on marketplaces, or how are you finding this kind of these businesses?
Both. So to be honest, when we started, we were purely focusing on off market. So what we did is we created our own data mining process. So the origin were like classic SEO tools out there like Ahrefs or SEMrush, who are able to detect the whole indexable web, right? And they're simply crawling the internet, more or less. And then you get hundreds of millions of domains. And then you have a filter process on this. So we check like what's the organic traffic, what's the traffic stability last 2 years, or have there been any dips? At a later, are there any audiences, social media entities connected to this? Because typically you'll find also like a Facebook fan page, a Twitter account, and so on, to get an idea of the overall audience size that you would acquire. Obviously, a topical match, like in what verticals these assets are playing. And at a later stage, follow also manual review processes. I'm thinking about to check the site if it is correlated to any kind of print magazine or journal, which would be a red flag for us as we are only doing digital stuff, or if the blog is already connected to some kind of e-commerce shop, which also will be a red flag as we want to work independently. And in the end, we have what would you guess? How long is our long list? After that, only targeting US and German-speaking countries.
Only targeting US and German-speaking countries that have. What are you looking for a threshold? Like, what's the minimum kind of traffic that you're looking for on that.
It's in the 6 and 7 figures monthly traffic range, and only also another limitation only in passion-driven verticals. So not finance, but more like sports, foods, and gaming, travel, and these kind of verticals.
Oh, really? And not finance. That's interesting. And I want to come back to that, but I'm just going to take a stab and say there's 100,000 of them.
Yeah, pretty close. So 45K.
Oh, 45,000.
This is
still, it's few.
So this is the longest, and yeah, it's I think quite a lot, especially given to the many filters we are applying. So besides of that, to answer your question, we also obviously have like a on-market monitoring on a daily level. So we check like new deals coming up on Flipper, on Empire Flippers, on FE International, and so on. And with some of those, we also have like very close collaboration and kind of a connection to see deals as soon as possible. But it's always a mixture of both to be on top of this game and to ensure not losing suitable deals.
So tell me a little bit more about the buy box for you then, and why it excludes finance. I'm actually particularly interested in that because as I've looked at, after I sold my business, one of the things that I have looked at is content businesses. And it does seem like there's a lot of revenue opportunities in the finance space. Like a lot of the bigger YouTubers that have the highest earnings are in the finance space, and the affiliate programs and all that kind of thing tends to be, it's very high. It's an expensive market to be in. It's an expensive market to buy clicks or to buy ads in. And so tell me about why you're avoiding that or any other market.
Mm-hmm. So you're totally right. So there are like outstanding commission rates, right, and very good monetization opportunities. What we like to do at Treasure Hunter, if we compare different verticals, we narrow it down to like an average EPV. So what's the average earnings per visitor we can get out of this if we have an analysis about 10 or 50 different assets for this vertical, and finance is at the top level there. But the downside is, I wouldn't say in general downside, but specifically for our point of view and the business we want to build, what is not working that well is that typically those assets have a lack of community. Not so much in, like, for example, there's the crypto community. I admit that's like there is definitely a lot of passion involved there as well. But I would say 50 to 70% of all finance blogs are more or less typically, like I would say, review sites, credit card reviews or insurance reviews that are not written with a lot of heart into it, and they would not trigger like readers to subscribe to a newsletter, to follow this blog on Facebook. There are some like passion assets in this scope as well, definitely, but they are not, I would say, the mass, and there are not too many of them out there. That's one reason. Another reason, thinking about SEO. So typically these assets come along with a lot of SEO volatility due to the immense competition, and also due to the fact that Google is, for example, is naming it a YMYL, so your money, your life topics, which are like specifically targeted for some of those Google updates, which is also causing a little bit or adding to this overall SEO volatility. So it's definitely, with other words, it's a red ocean SEO-wise. So you have the situation that you have SEO and content-wise a red ocean, and on the other side, limited possibilities for growing like audiences and communities, which is adding up to a non-ideal situation for us at Treasure Hunter. But obviously, there are a lot of out there who are generating a lot of money and are doing well for many, many years.
Hmm. So what are you looking for, you talked about revenue per view or per user? Which one? Tell me a little bit more about that. Like, what are you looking for? What feels good to you, or what fits in your box?
Yeah, typically those assets have a minimum revenue of 8 to 10 grand a month, and are in this EBIT range of 60 to 90% EBIT margin, and they are not, I would say, over monetized. Thinking about if you take a look at an asset, we semi-automatically detect like what URLs or what articles are, I would say, transactional. So our reviews or targeting keywords like best or comparison or guide or something like that. And what are informational
Yeah.
articles? And there should be like a ratio that is healthy in the end of the day. And also, and then previously mentioned EPV. The EPV is very specific based on the market and based on the verticals, so typically way higher in the US than in Germany. I could name one example if you're interested. So for the German
Yeah.
travel market or vertical, we have an average EPV of around 5 euro cent. And in the US, it's more like $7 cent.
Wow. Okay. Interesting. So some of the other ones you named are like beauty and gaming. I totally get how like I have a daughter and I have a son who's a gamer, and like so I definitely see how it does really become community. People get interested in something somebody's saying and sort of just follow along with that. How are you? And you also brought up newsletters. Tell me a little bit about how you're monetizing these. It's not just AdSense on it. Then I mean, it sounds like you're doing something. You're going beyond that. Yeah.
Yeah, exactly. So typically, these and this is, by the way, one of the risks those assets have when we acquire them is that they focus in, I would say, 80% of all cases on only one or two monetization channels. So it's display ads,
Oh wow.
and we are ad networks, typically like MediaWine or AdThrive in the US, or affiliate commission via Amazon, eBay, whatever. What we then, as oftentimes it's a low-hanging fruit. What we loop in is our sales department. So, and our contacts to contacts to advertiser, where we are then selling, for example, guest posts. We are selling branding campaigns, and one of our key drivers is also like our CPC deals based on reviews. So this is our ad platform that we've developed and we are owning, where we are curating specific unique deals, which not only provide a significant uplift compared to if you would link out to Amazon, for example, but also is helping us to diversify.
All right. So give me just broad strokes. I want you to reveal anything proprietary or whatever, but give me some broad strokes to help me understand. If you buy something at whatever at 3x EBITDA for $1 million, what's the goal for this asset? Are you looking to grow it and flip it? Are you looking just to straight operationalize it, just hold it and try not to do anything with it? Or help me understand a little bit about what you do after you get it.
It's 100% buy and grow case, I would say. So we don't flip them. We buy them, grow them, operate them using the synergies. Obviously, as every company in many years, we are aiming for an exit to sell them all together as a growing portfolio, together with the DSP and the tech that is like connecting them technically, and the I would say overhead sales department, which is then taking care of the global monetization of the portfolio. But that's our strategy. So definitely not flipping. We are aiming to keep them until the I would say end of our journey at Treasure Hunter. So for the next like 5 years plus.
So a potential exit is you put these all together or in groups and sell them to bigger publishers,
Yeah.
bigger media companies sometime down the road. Is that the idea?
Exactly. So
Eventually.
possible exit channels are exactly as you say, media companies, media corporations. We see this especially in Germany and also in parts in the US more and more that. To name one example, I'm not sure if you're familiar with Axel Springer. This is a large media corporation for German-speaking countries, and they are now also trying to get into kind of these passion verticals by a kind of, I would say, editorial digital spin-offs, kind of blogs. So they we even had an offer for Evergrowing not too much time ago. So they're definitely interested in these kind of grown portfolios. Besides that, obviously e-commerce, right? So any larger e-commerce player, because in the end of the day, what is our product? Our product is an audience and is in the end high converting traffic, right? Which is valuable for any e-commerce player out there. Last but not least, like private equity, right? So those are the main possible channels.
All right. So tell me a little bit then. I think we've covered the thesis there, and I think we even talked about the edge that you guys have with the background with Evergrowing and all that. I want to talk a little bit about, well, first off, where are you at with the journey in the fund? How many acquisitions have you made, and how much have you raised, or what can you tell us about that?
So when we started last year, right after our after foundation, we had a seed round, just 400K that the four founders chipped in. With that, we acquired our very first asset. It's a German travel blog that we have grown up until today by almost 100% revenue and EBIT wise, which I think is a great success. And besides that, we obviously invested into tech and further developing our DSP and forward hiring, I would name it, so staff wise. And then we had our pre-series A venture or business angel round closed in August this year. Collected another 1.85 million in equity, and we are very close in fully deploying it. So we acquired in total 5 assets, and 2 others is the other one hopefully tomorrow, and the other one before Christmas. This is our goal. Besides that, in November. We hit our milestone that we reduced our burn rate to 0. So, given the current market environment, I think it's a good advice for every startup to take a look at the costs, to reduce overhead, and to run the company efficiently. So that was one of the major tasks on Michael's and my desk. To really get independent on a corporate level of future fundings, to being able to run the business and to control the speed at the end of the day. Besides that, we are definitely looking for further fundraisers in 2023. As being an aggregator and having this roll-up case, we are always in need of cash, right? If you want to grow quickly, be it we are a fund type of structure like what we are currently doing with Flipper, or be it also thinking about kind of a venture round with institutional investor and collect or like ramping up a VC. and then leveraging this with venture debt. So these are the avenues we are looking for 2023.
Okay. So tell me a little bit about, I want to understand what risks you see in this, or what you're keeping an eye on, and how you aim to mitigate those risks.
I think, well, one risk we have already addressed, right? This is the monetization of these assets, operational wise. So this we can mitigate via our own sales team, via the contacts and the network we have. I think that's really crucial here, because if you would imagine a situation where you're just like 90% of the revenue would be via the Amazon affiliate program, and you would be banned from Amazon for whatever reason, that would be quite a mess, right? So I think that's a risk we are aware of, and I think we almost completely were able to mitigate. The other one is traffic diversification. So obviously traffic is the living source of these assets. No matter how well we are monetizing them, the more traffic, the more reach, the better we can monetize and the better we can grow. And oftentimes, if we acquire assets, 90 to 95% of their traffic is based on pure organic reach, so SEO. And with our inbound and community building measures, we step by step reduce the dependency of organic rankings and therefore traffic significantly. And building a loyal community is not only crucial to mitigate this risk, but on the other side, it helps also sales-wise, right? Because having a loyal community is converting significantly better. So you can also like increase the fees for guest posts or any kind of commission rates you're having. So that's the second side benefit of traffic diversification and putting more effort into inbound traffic streams. I would say another risk would be if we would run out of possible assets to buy, right? Because we can't aggregate assets if there are not enough out there. But given the 45K long list we have in place, and given the fact that every week there's a 2-digit of new assets available, even in our tailored niches and verticals on the larger marketplaces, I think that's also a risk which is more of a theoretical nature.
Yeah, I had the business I sold, the traffic was largely organic. And so I'm glad you addressed that, because over 12 years, there's lots of Google updates that happened, while I held that. And it was, trying to figure out constantly what Google wanted from you. In the early days, they wanted constant production. And so, we're putting out lots and lots of smaller posts, and then later on they didn't want that at all, and so we really had to like reduce and consolidate and delete.
Exactly. So the so-called skyscraper content. Exactly. Yeah. So that's but all these ups and downs and all these Google updates are even more relevant in these high competitive niches like the finance niche. So that's exactly, to circle back to that. I think for a blog around, playing tennis or soccer, you're a little bit more safe, on the safer side for all of these Google's ups and downs and hiccups than you would be with a website around cryptocurrencies, for example. Yeah.
So what is the fund type that you're raising right now? Is it for accredited investors only, or tell me a little bit about the nature of the fund?
Yes, the fund we are currently having on the table is in collaboration with Flipper, Flipper.com. So Flipper is one of the 3-4 largest digital marketplaces. have recently launched their invest program, so offering investors like to participate on different kind of digital businesses. And we're the first one in the content space. Yeah, we are targeting $2 million with a minimum investment of 10 grand. And it's based on a 506B structure. So it's focusing on accredited investors. You have the option with 35 non-accredited investors as well. But the overall, I would say, structure and SPV building and organization is done by our partner, by Flipper in this case.
Okay. So you said 506D, right? I'm having I think one of our internets is not awesome, or maybe both. So sometimes I'm missing what you said, but I think you said 506D and a $10,000 minimum.
Exactly. Brecht, I'm sorry, I didn't get your last sentence. I think
I'm going to go ahead and switch us to low data mode.
Can you hear me?
And we should be able to still hear me. It'll still be recording, but I won't. We just won't have each other's video, and I'll cut this out in the middle. You still hear me okay?
No, I can hear you again. Great.
Okay. Yeah. So I just switched us to low data mode. I'll cut this section out. So it's still recording video on your side. At the end, we'll have to give it a minute to upload, but it'll do less video transfer right now, just to improve hopefully the quality of the conversation, because I'm starting to have a like a lag over here. So
okay.
But you can hear me okay now?
I can hear you perfectly fine. Yeah.
So 506D, awesome. 506D, $10,000 minimum. And then I'm going to pick up from, I'm going to clap over here, which you want me to do, but it's going to help me find the place to cut. Okay. So tell me about the returns that you're targeting. Like, is this an income fund? Are you doing distributions on a regular basis, or how does that work for the investor?
Yeah, great question. So it's actually both. What we do is we pay dividends on a quarterly level, 15% per year. And besides that, we have the liquidation preference 1x and the exit participation, which all adds up to a money on money multiple of in the range between 3 and 3.5, depending also on the exit valuation, right?
So you're targeting a 3 or 3.5x return on investment, is that right?
Right.
Wow. Over what period? What is the hold period that you're targeting with this?
5 years. 5 years.
Okay. So tell me about what I haven't asked so far. Are there things that I haven't dug into that you think would be important for somebody who's considering an investment like this to ask or to know?
Good question. I think what is relevant in this for the asset type of content sites, it's really the EBIT margin that we already discussed, and which is also setting us apart from a lot of other aggregators out there. So if you take a look at the FBA aggregators, and oftentimes if investors are just taking a short look, right, and not they combine us or throw us in one bucket with FBA aggregators or FBA sellers, but they typically have like an EBIT margin somewhere in the 10 to 25% range. So that's I think the big difference there. Besides that, I guess with content sites, we definitely are on an asset class that is or offers a lot of stability on the long run, because typically if you if you take a look at the background or take the seed of the sellers who are selling the sites to us, those are content creators, so they see themselves oftentimes as artists, right? So they have a certain passion, for example, in I don't know, going out and going fishing or traveling a certain country. And sooner or later, they started to write about this, share this with their family and friends. This is growing down organically. They sooner or later think, oh, well, I've now an audience. They know that there's some kind of affiliate marketing going on, so I will implement some tracking codes, and the monetization was born. So this is, I would say, the life cycle. And sooner or later, many, not all, but many of these founders hit a level where things are starting to get overwhelming from an operational dimension, because even though most of them are able to learn very quickly and SEO and sales topics and monetization topics, they see themselves doing a lot of things that are not related to their inner passion, and this is creating content and engaging with their audience and exchanging knowledge. This is what their passion is, and not like checking monitoring tools, exchanging some kind of tracking links, or entering sales discussions, with possible advertisers or clients. So this is typically a level where they start to consider like selling their asset, and oftentimes some kind of private urgency or some wish pops out that requires some kind of cash, and this is then the trigger to put the asset on a marketplace, or to reply to outreachers like from our M&A team. And so given this status quo, when we enter the discussion and we are taking over control, buying the asset and growing this, to understand all the low-hanging fruits and the potentials behind those, I think it's very important to know like where these assets are coming from. So they're oftentimes not in I would say professional hands thinking about tech structure, infrastructure, monetization and sales dimensions. They are though very well operated from a content dimension, and from time to time from an SEO point of view. And when investors are then digging into our figures, forecasts, and low-hanging fruits, they're oftentimes wondering like how are these growth projections even possible? And we oftentimes see ourselves confronted with some kind of like rumors about like we will spam, and those figures around our first asset can't be possible. But I think once you understand like what's the shift of management when acquiring these assets from private hands and like forwarding this and onboarding this to our corporate structure, I think it becomes much more understandable, right? So I think that's important to know. And that's the background for those massive low-hanging fruits that we can grab during the first months, or let's say the first year after acquisition.
Well, that's awesome. It's pretty exciting. I'm glad that you were able to come on here and talk about this. And I don't know, I haven't seen anyone else doing this exact thing. I'm sure somebody's out there doing something similar, but I haven't seen it yet. And like I said earlier, I understand those margins and have seen it, in lots of different friends' businesses, and so it's pretty exciting. And the returns you're targeting are as well. Tell me a little bit about how folks should find you if they want to learn more about this, if they want to chat with you. Or what are the first steps if somebody thought that this sounds good and they want to take the next step to learn a little bit more about investing?
Sure. I think the best way is just to reach out via email. So my email is benjamin.chart@treasurehunter.media, or like checking out our website, treasurehunter.media. Or I'm pretty active on LinkedIn as well. So yeah, happy to connect, be it with like asset owners who are considering selling, or potential investors, or just other like marketing experts and digital thin persons who want to exchange. Always happy to hop on a call and have a chat.
Okay, well, that's awesome. Benjamin, I appreciate you coming on here. I'm going to take a real hard look at this. It sounds very interesting to me. This will come out. We've got quite a few queued up between now, but you're probably listening to this in mid-February. I assume your fund will still be open by then, and you're accepting investment at that time. Yes. So that's awesome. Thanks for coming on here, and I really appreciate it.
Thank you so much for this opportunity. It was a pleasure, and yeah, keep it going. As I said, I by accident stumbled upon your podcast, and now I'm a big fan. So congrats to your great work, and have a great rest of the day.